Hi everyone. Today I want to talk about what drives the price of BTC USD and the case for BTC as a store of value. I suppose to introduce myself, I got into crypto in late 2017, then ended up missing a lot of the opportunities that the bear market presented. Realizing this, I got serious again about my crypto research in 2020. I'm not a household name yet, so why listen to me? I guess a bit of background is that I have a bachelor's, honours and master's in mechanical engineering, where I specialised in time series kinematic modelling. After graduating, I spent 4 years as a data scientist and software engineer in this field of time series data modelling. So what's the motive for this video? Something I've been trying to understand is the levels of resistance we've seen and we are seeing form just really since the start of this year. For example, why didn't we see a blow off top for BTC USD? And when everything else is going crazy, why after this capitulation are we having a hard time seeing positive price action? The other motive for this video is trying to understand the risks to Bitcoin's price action from whatever the significant external factors are. So, being an engineer, I strongly believe in cause and effect. That is, there is some input to this system which is causing this output that we see. And there's some sort of change in behavior that can explain why we saw sideways action at the top instead of a blow-off top, and possibly why we're seeing sideways action now. So this got me thinking, what is the most significant factor for BTC USD? And it got me thinking, Bitcoin USD is the primary trading pair for Bitcoin. There's probably more volume on Bitcoin USD, whether it's fiat or stable coins against the US dollar, than there is on anything else. So if that's the case, fundamentally the change of the US dollar should be the greatest contributor to changes in the value of Bitcoin. Another interesting point to raise there is that when you compare market caps of value, so not thinking in terms of US dollars, thinking the kind of intangible value of something, there's much more value stored in the US dollar than there is stored in Bitcoin. That means that with this coupling, whatever fundamental changes there are in the value of the US dollar, there's going to be significant effects on Bitcoin because it has a much less market cap in terms of total value stored. So to understand the true value in the USD, there's a couple of metrics which are available to us. The most commonly used, I think, is the DXY. So to explain the DXY in simple terms, it's the strength of the US dollar in terms of purchasing power against a basket of other currencies. So this is the strength of the dollar through time in terms of purchasing power relative to other currencies. Now, there are some problems with that, mainly that the DXY basket doesn't include the Chinese yuan. So in relative terms, given that the Chinese yuan over the last, I suppose, 3 decades has become a greater and greater contributor to value in the world economy, or as a store of value in the world economy, this DXY is missing that from the basket. But that's also to our benefit, is that this basket has stayed consistent through time. It's the same relative measure throughout time of the strength of the US dollar. So, second to that, we've also got the money supply. This is M2 money stock. And that is telling us basically what is the current stock of money for the US dollar, and by the M2 measure, which I'll let you look up for yourselves. So this got me thinking, neither of these things really explain the fundamental change in value for the US dollar itself, because what we need to understand best is what is the value stored in the US dollar to be able to understand how that can affect the valuation of Bitcoin or the price of Bitcoin in that currency. So I thought to divide the DXY by the money supply or the money stock, M2 money stock. And what's that is giving us is the relative value of the US dollar given the M2 money supply. And that's what we see in this chart here. And I like to think of this as basically the relative value of Bitcoin, of the US dollar through time. We can see here in March 2020, we had a rapid devaluation where they've turned on the money printers, but perhaps the DXY has been fairly stable in terms of purchasing power. But that's telling me that we're getting less value in the US dollar through time, just because we've got so much printing going on. Everyone else is printing, which is why we're not really seeing that in the DXY. So that's why I thought to look at the M2 money supply here. So the M2 money supply also has its own issues, where the data is only as good as what is being reported. So if the M2 money stock isn't being accurately reported, then we can't really trust the data. Same goes for the DXY. It's missing the Chinese yuan. So combined here, we've got some additional sources for error when we look at this plot. So for context, we can see here in 1986, 1987, we've got the Black Monday stock market crashes. We've got the 1990s recessions. Then in 2000, we've got the dot-com bubble, and then we've got that devaluation of the US dollar there. And in 2007, 2000, and through to 2009, there's the GFC, devaluing the US dollar again. And then we get to March 2020, where we've got that devaluation from the global financial crisis caused by COVID-19. So how can we use this to understand the effect of this change in value on the US dollar and what it means for Bitcoin? So to do this, we can add ourselves a comparison with the Brave New Coin liquid index for Bitcoin. So we'll add that to our chart, which we already have added, and let's make it visible. We've got our charts in Logarithmic, and if we bring things down a bit, kind of looks like where we've got a drop in value of the US dollar, we get an increase in the value of Bitcoin, which makes sense because as your US dollar is worth less, it's going to take more of them to buy a Bitcoin. So let's explore that a little bit further. And to make this easier on our eyes for some correlation, we can invert the chart for our value measure. And then we'll bring Bitcoin on up. Now, this is where things get very interesting, in my opinion. We can see there's a very strong correlation between this measure of value on the US dollar and the value of Bitcoin. That is until we get to March 2020, where we see an extreme departure from the value of Bitcoin. So historically, strong correlation, but that's been invalidated when we got to March 2020. So let's think, where was our blow off top that we were expecting? We'll change to our weekly chart. Alright, so what we can see here is around this region we were getting some pretty crazy price action, and sorry guys, I'll just shift this around a bit more. We're going up and up. Bit of a delay here after the money printers turned on like crazy. Bitcoin's realized, hang on, I've got some catching up to do. So we've seen some positive price action. And then when we get to the top, this is around where things leveled out. So that was kind of the first sign that maybe the money printers were slowing down, or at least the valuation of the US dollar was leveling out. And I think bad news hits a bit harder than good news. This is entirely speculative. And that's why we saw things kind of level out rather than making new all-time highs. Then I'm guessing around this point where we saw a reversal, that is, the value is increasing on the US dollar inherently. The big boys at Mission Control probably had some info before the rest of us that this was coming, and that's when we saw that dump in BTC USD, and we've seen that continued reversal where the inherent value, as I'm calling it for this metric, value continued increasing, which is creating a headwind for us at the moment in terms of putting in new all-time highs for Bitcoin, at least against the US dollar. So I think all models, just as Benjamin Cohen says, all models are wrong, some are useful. This is a useful model, so treat it with caution. But there's definitely some interesting things here to look at. So I suppose the first question that comes to mind is, are we going to catch up with what our historic correlation has been for this metric? And I think it could go either way. One of the popular models for Bitcoin at the moment is logarithmic regression. Through time, Bitcoin's traveling along this arc, right? But we've also got strong correlation against US dollar. And Alex has mentioned in the past that he thinks in the next few years, maybe even in this cycle, we could see Bitcoin decouple from the rest of the crypto market and just break away, so to speak. So I think what we're going to see here really is a test of whether Bitcoin is going to continue tracking along its logarithmic regression, or whether the perturbations, or I guess the external forces acting on Bitcoin's valuation, like what happens in the US dollar, whether that is going to overcome that logarithmic regression model and see us travel along and maintain that correlation. So I think if there's any good explanation at the moment for me for why we could break away from that logarithmic regression, it would be looking at this historic correlation of value, and that Bitcoin generally respects the inherent value of the US dollar. So could we see a blow-off top later in this cycle? Most likely. Probably once we get past this, I guess, spot of bad news where we're having some reversal on the inherent value of the US dollar, then we might be ready to take off again and potentially catch up with this action on the US dollar's inherent value. So why aren't we seeing this happen immediately? I think that's because the money being injected into the M2 money stock is largely going to companies and corporations, and they either may not be interested in putting that money into Bitcoin, or it's just taking them a long time to make those allocations. So that when that switches on, that might be where we see our catch up with that value correlation through time. Either that, or they do a significant amount of tapering, which we'll kind of see what we had in the past here, where there's some not great correlation through this period. We could see a correction on that value instead, coming back down in line with Bitcoin. So as I mentioned earlier, this short-term increase in inherent value of the US dollar is likely what is preventing us from putting in new all-time highs as we travel sideways over the last couple of months. Alright, so the last thing I wanted to cover off is a bit of speculation, well, additional speculation on our metric here. So we'll remove, this is our metric for value, change the inversion back, have a look long term, change it back to months. So something I notice here is there's something cyclical happening, and I've attempted to draw those cycles in, where it seems historically when we touch this upper curve, that's when we get some sudden and serious devaluation of the US dollar by this metric. So these first two cycles are about 200 months in length, so I decided I'd just project another curve about 200 months long, and this is where we're sitting at the moment. So if we blow this up, we can see very clearly we've been traveling down for quite a while. Now we're having this correction here where we're recovering some value on the US dollar and leveled out, which I think explains quite a lot the recent price action. Alright guys, that's it for now. Hope this was useful, and maybe I'll see you in the next one.